Hello, everybody, and welcome back to All That Tesla Stock. Tesla is viewed as one of the top stocks in the EV market in the previous year. The organization's investor returns were 9.7%, which is a phenomenal outcome contrasted with the U.S. market, with general returns of 18.4%. In any case, in spring of this current year, CNBC's Jim Cramer uncovered stunning news about Tesla stock. Frantic Cash's host said that he favors Portage over Tesla stocks, despite the fact that he used to be very hopeful about Tesla. Indeed, continue to watch this video to figure out more on that. However, before we start, remember to like and buy in and turn on warnings to push cutting edge on everything along on with Tesla. As a large number of all of you know, Jim Cramer is an American television host, and he's most popular for his venture counsel show Distraught Cash, which has been circulating on CNBC beginning around 2015. A portion of his stock singles out the show made audience members who put away a large chunk of change, yet most certainly not every one of them. In any case, however, Jim isn't terrified to offer his perspectives about various stocks, including Tesla's, and he gives this to his masses of watchers, which he's collected throughout the long term. Before, Cramer was an organizer and chief of the extravagant Cramer-Berkowitz multifaceted investments, as well as the fellow benefactor of a monetary prompting site, TheStreet.com. He's likewise a notable writer expounding on cash, stocks, and how to get rich. For a couple of years, Jim Cramer was areas of strength for an of Tesla stock. His relationship with the brand began a couple of years prior after he had a good time with his little girl's Tesla out. From that point forward, he's been a distinctive devotee to Tesla stock. Nonetheless, as per Cramer in a walk interview, he communicated his conviction that Portage stock will be like to Tesla stock. Passage is getting ready to turn into the head of the EV market, delivering around 2 million electric vehicles by 2026. As indicated by Cramer, Portage's Jim Farley makes nothing that doesn't bring in cash. This is upheld by Passage stock cost increment since Farley took over as the organization's chief in October of 2020. He's likewise been moving the organization away from burning motors and towards electric vehicles, which is crashing into a similar market portion as Tesla. Assuming you excuse the play on words, sometime prior, Jim Cramer scrutinized Tesla's Cybertruck and expressed that this would be Elon Musk's most memorable failure. This is a really peculiar assertion thinking about that Cybertruck isn't delivered at this point, and there's a ton of promotion and pre-deal orders as of now with the drop anticipated mid-2023. Cramer impacted Tesla's truck, yet in addition suggested watchers purchase a Passage F100 Lightning L electric truck, an electric rendition of the notorious American pickup. Presently, we comprehend where Jim Cramer is coming from, and he may be correct that Tesla will before long face weighty rivalry inside the electric vehicle market. However, Cramer could in any case hold some Tesla stock. In any case, that is something Cramer is neglecting to notice, and that is the way that Tesla is definitely not an all-electric vehicle organization. It is substantially more than that, quickly moving towards simulated intelligence. The primary Tesla unit that includes man-made consciousness is autopilot, and lately, Elon Musk zeroed in on not just adding little advantages to the Tesla vehicles like self-leaving or voice control, yet in addition fabricating an all-out independent auto that doesn't need a driver. As indicated by Andrej Karpathy, the head of man-made consciousness and autopilot vision at Tesla, the organization is seeking to turn into an engineered creature, a vehicle that is a living animal that freely moves around, but on the other hand is equipped for feeling and considering its environmental factors to be well as cleverly answering the climate. These are important for the engineered creature, which is inherent house. Tesla is additionally hoping to make its self-driving tech very astute and safe. At the point when it at last removes, it will altogether beat human driving and will consequently work on the driving climate overall. It is extremely dicey, however, that individuals will need to purchase regular vehicles once one self-driving tech is accessible. It's likewise essential to take note of that Tesla is investigating their computer-based intelligence unit past autopilot, needing to make a Tesla bot. This item is a humanoid robot that will take over perilous or dreary errands working on living souls. Taking into account the way that Tesla isn't just profoundly submerged being developed for the vehicles, but on the other hand, it's pushed ahead with their non-vehicle man-made brainpower tries. How then, at that point, could Cramer at any point actually put the organization into the vehicle market is a central issue. Assuming you take a gander at the two organizations, Tesla and Passage, all things considered, they're in totally various business sectors. Passage is finding Tesla in the section, however different organizations contenders. Portage is likely a whole age behind Tesla in the man-made intelligence advancements, regardless of their driver helped highlights. Why then, at that point, did Jim Cramer leave his help for Tesla? Indeed, one of the responses is the generally macroeconomic instability, with numerous specialists foreseeing an overall downturn. In any case, Cramer isn't one of those specialists. He has an inspirational perspective available. What's more, as guaranteed by Cramer, stocks are positively ready to flood on the off chance that a few things head down the correct path. In one of his new meetings, he expressed that there are various monetary perspectives that can impact financial backers' assessment of the securities exchange and choice about trading positions. As per Cramer, one of the fundamental variables is whether the central bank chooses to start a delicate landing, which will assist with holding back expansion and keep away from a downturn later on, he said. We needn't bother with all that to easily go. Just minor fixes are required. A drop in oil costs could be the response. Quite a few information focuses showing a diminishing in expansion could do likewise. Cramer likewise tried to take note of that it's an exceptionally certain sign when a financial exchange develops with no news. Taking a gander at every one of his assertions, obviously Jim Cramer is exceptionally hopeful about the financial exchange from here on out. Here we return to the first inquiry then. For what reason would he say he is not hopeful about Tesla stock, assuming he has confidence on the lookout? At first, it could appear to be that Jim Cramer essentially set his sight on an EV organization that isn't Tesla. Nonetheless, assuming we investigate, obviously that is not the situation as the master has not communicated the support of some other electric vehicle organization. For example, he said that he doesn't believe that Rivian, a US EV creator, is the following Tesla. However, on the contrary it's a fairly unappealing truck maker. He additionally expressed that it's better assuming Passage sells his portions of Rivian and offered an uplifting comment about broad engines. As per Cramer, Matty Barra, General Engines chief, is doing a very great job, having constructed areas of strength for a division, investigating all the recently referenced Cramer explanations. We can now expect that the master has moved his general financial planning philosophy, presently inclining toward heritage auto producers with areas of strength for established. Notwithstanding Cramer's faith in a steam stock, they've likewise experienced inconveniences as of late, unbelievably high international pressures, bits of gossip about another coronavirus wave, as well as an episode of monkeypox, have all significantly affected the securities exchange and the generally monetary circumstance all over the planet. Despite the fact that the macroeconomic circumstance is exceptionally tense, Tesla is hoping to acquire customers because of its expanded gas costs on account of the contention. This is as of now observable considering Tesla's stock cost increments. In the event that the contention proceeds, an ever-increasing number of buyers will go to electric vehicles as they will be less expensive. As far as upkeep, such a monstrous change in customer inclination is certainly going to influence Tesla's stock cost in the long haul, as it is the main electric vehicle organization available. The shift could have a gigantic effect on the Tesla costs as it outperforms its 2026 goals. Jim Cramer's viewpoint is substantial, and he puts together it with respect to insights and past monetary cycles. In any case, it's fundamental to incorporate purchaser conduct that is much of the time reliant upon countless variables that all assume a part. We can't be aware without a doubt why Cramer turned on Tesla and Elon Musk. However, we help know out future with accentuation on man-made consciousness. Furthermore, it is likewise essential to recollect that Tesla is a development stock that will in general be on the more dangerous side, yet it can likewise receive significant monetary rewards. Gratitude for watching. Look at our different recordings and feel free to like this one. And furthermore, buy into the feed while you're still here. Feel free to tap on one of these two recordings on your screen. See you there.